95% of investors are still using a playbook from 2010. They're looking at PE ratios, reading quarterly earnings, and crossing their fingers. But while they're doing that, the game has fundamentally changed. In 2026, the S&P 500 isn't just a collection of companies, it's a battleground for algorithms. If you aren't changing how you invest right now, you aren't just falling behind. You're becoming the exit liquidity for the people who are using AI. Today, I'm breaking down the exact three-step shift I've made to my portfolio to survive and thrive in the age of agentic AI. For decades, the retail edge was about finding information first. But today, information is a commodity. AI models like Google Gemini and OpenAI can digest a 200-page earnings report in 3 seconds. By the time you read a headline on your phone, an AI-driven algorithm has already executed 10,000 trades based on that news. The speed edge is gone for humans. We can't outtrade the machines. This realization was my first wake-up call. I realized that if I keep trying to beat the market on speed or basic data analysis, I will lose. The first big change I made? I stopped trying to find the next big stock and started building a systematic framework. In the old world, you'd ask, is Nvidia a buy? In the AI world, that's the wrong question. The right question is, what is my AI-assisted framework for evaluating the entire tech sector? I now use Agentic AI. These aren't just chatbots, they are do-bots. I use tools like Origin and Apex FinTech infrastructure to create multi-step workflows. Instead of manually checking my portfolio every morning, I have an AI agent that monitors my investment policy statement. If a stock's fundamental narrative changes, say a CEO leaves or a patent is denied, my AI alerts me with a summary of the implications, not just the news. I've moved from being a laborer in the fields of finance to being the manager of a digital research team. The second change is how I handle risk. Did you know that in 2026, AI-related companies represent over 25% of the S&P 500? We are seeing a concentration of wealth like never before. Most people think diversification means owning 50 different stocks. But if those 50 stocks all rely on the same AI chips, you aren't diversified. You're exposed. My new strategy involves second-order winners. While everyone is fighting over the Magnificent Seven, I'm using AI to find the companies that are using AI to explode their margins. I look for the boring companies, utilities, healthcare, and logistics that have integrated AI to cut costs by 30%. These are the monetizers. I've shifted 20% of my growth bucket into these value-oriented equities that the frothy AI hype train has ignored. This is the most important part. AI is brilliant at logic, but it's terrible at human sentiment during a panic. Algorithms are programmed to follow trends. When the market dips, AI often accelerates the sell-off, creating flash crashes. My new strategy is built on emotional arbitrage. I've set up automated buy-the-blood orders. When the AI agents trigger a mass sell-off based on a technicality, my system, guided by long-term human judgment, is ready to scoop up quality assets at a discount. I've learned that the more the world becomes automated, the more valuable patience and conviction become. AI can give me the data, but it can't give me the stomach to hold through a 20% drawdown. My job in 2026 isn't to be smarter than the AI. It's to be more disciplined than the people who over-rely on it. Investing with AI isn't about letting a computer handle your life. It's about using the most powerful tool in history to free up your time for what matters. The passive part of passive income only happens when you build a system that works while you sleep. I am changing how I invest because the world has changed. And if you're watching this, you're already ahead of the curve. If you want the specific list of AI tools I mentioned in this video to build your own investment command center, I've put a link in the description below. What's the one thing holding you back from using AI in your portfolio? Is it the tech or the trust? Let me know in the comments. I read every single one. Don't forget to hit that subscribe button to join our community of 2026 investors. I'll see you in the next video.